The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the February 8th wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check out what the markets are communicating to us at just past 1 o'clock in the afternoon. We'll go figure out what the bulls and the bears, what the buyers and the sellers are telling us about all the different various markets out there. I'd love to hear from you. And the easiest way to do that, I'll give you 3 ways. Number 1, you can pick up that phone, dial on in 877-927-6648. Of course, internationally, 727-445-1044. You can send me an email like Greg in Minnesota did just a few minutes ago, or you can, in the Tiger's Den, go ahead and ping me. Any ping will do. So let's go ahead and get this show started on Wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we've got the Dow trading off 44 points. He's trading out at 20,046. S&P is flat, trading at 2292. NDX 100 up 7 points. NASDAQ Composite flat. Russell's down 6. Semiconductors are up 1.5 points. Gold is up $7, trading at 1243. Silver's up 4 pennies, trading at 1780. Light sweet crude is up 16 pennies, trading at 52.33. Leading the charge here, dollar-wise to the upside, you've got Coherent Inc., COHR up $27, 17%. Mighty move there. Tesaro, TSRO, up $22, 14%. Panera Bread is up $17. AutoZone up 13. Universal Corp up 11. O'Reilly Automotive up 10. Amazon up $6. To the downside, it's SPS Communications up down to about $13, around 20%, with 1.3 million shares thus far traded. Akamai Technology off $7.50 or about 11%. Gilead Sciences down 10% or $7. USANA Health off $7 or about 11%. So we've got stocks to the upside and to the downside. But let's do this first here. Let's go ahead and get really to Greg in Minnesota's email or question out here, because it's going to be on many people's minds. So the email reads like this. Steve-O, with a nice little smiley face, says, thank you for the gold trades. Thanks, question mark, to David White. So it says, thanks to David White, I suppose. I closed them out yesterday on Tuesday. I subscribe to both of you guys and love you both. Well, we both love you as well. But since you are not reading a TFNN script, you don't always agree. Now, folks, that is perhaps the most important thing that Greg wrote here. We are not reading off of the same script. I've got really no idea, other than listening to Dave's show here. We don't talk about what our different calls or views on the markets are. And that is a beautiful thing. Now, I know that from time to time you'd like for all of us to be on the same page out here. I think instead what you want to do is you want to have differing views, people that look at things differently, because we each use a set of different tools out there. So, Greg, I really appreciate the fact that you're subscribing to both David and myself out here, and that, yeah, we are going to just, we're going to use that Dave Mason song. We're just going to disagree or something like that, right? Not always, though. He said something in his newsletters lately that made me decide to take profits in the gold trades you helped me set up. I expect a short-term pullback before the gold trade continues higher. Do you somewhat agree with that idea? I'll be listening to your show today as always, and I'm sure you'll address gold then. Thanks for teaching me how to trade. P.S. I earned enough on the gold trades to pay for 2 years of newsletter subscriptions to you and Dave. So you got to like that. And yeah, I mean, this was the trades. We've been in the mining trades. We began in November. We started adding in December as well. And so, hey, kudos to you for taking profits. I mean, they're up on just your portfolio. Just if folks just took the gold trades on their total portfolio, the number of shares suggested in each trade out there, the portfolio for the year, and this is only February, 8th or something, would be up for the year 17%. I mean, you could just simply, if you like that kind of return, you could just say, pack it in and say sayonara, adios out there. So first, taking profits is never a bad thing. So with regard to, is it a good idea? The good idea was, hey, you took profits out here. So now instead what I'm going to do, because I'm not sure what Dave is saying, and that doesn't really matter. Instead, what I would rather do is just lay out the case with regard to what it is that I see and the reason that we continue to be long in those mining equities in the newsletter out here. So the very first thing that I take a look at, it's not really the first thing, but let's take a look at the Japanese yen out here. And this is really going to be, this is the so-called wild card. Here's what it is that we are looking at. We're taking a look at the currency pair. And what we can see is the last three trading sessions where the yen has found support is at the bottom of its weekly market profile. That level, by the way, is at 111.67. We're trading at 111.76 or so right now. I have a 15-minute delay, so we could be trading somewhere differently than that. But in essence, you get the gist. The key is here, Greg, is that if, in fact, the yen closes below 111.67, then there is no support with regard to this currency pair other than going and taking a look at a retracement level. No, there's been no base set up here that I can see off of this big, huge move off of the November 9th election to really stop the yen from continuing to strengthen. And this chart here, as it moves lower, the yen is strengthening, the U.S. dollar is weakening, which is the next key that I will go into, the U.S. dollar weakening. See, with regard to the currency pair, and gold in essence is a currency, is it not? No, it is. If I take a look at what the U.S. dollar index is doing, now this is taking a look at the CFTC data and take a look at the commitment of traders information as to what the large commercial traders are doing, presumed to be the smart money. Now, if we take a look at the bottom panel on this chart, you're going to see a black line. What you will notice is that commercial traders are at their high. Now, this does not include last week's data. It didn't change significantly, so it just simply didn't update it. It's a bit of work to do, the spreadsheet and everything. They're basically at a huge, and I do mean huge, net short interest. So large commercial traders, as a percentage of open interest, are anticipating that the U.S. dollar index is going to go down. Well, with the yen being one of those components, 12 or 13% of it, and it's going to potentially break through that profile level, it would get stronger. U.S. dollar index would get weaker. That makes sense to me. You know how, Greg, you know how you and I love these seventh wave patterns out here. And if we take a look at this weekly chart, now we're to the upper panel out here, what we can see is that many weeks ago, 1, 2, 3, 4, 5, 6 weeks ago, this formed a seventh wave move. There's a hammer candle from 2 weeks ago. All I want to see is that thing get cracked on a weekly basis. And then it's sayonara. Sayonara, King Dollar. Steve Rhodes from TFNN. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Now, the CFTC data that we're taking a look at is to give you an understanding of how traders are positioning themselves. It is not a timing tool, but it's useful information. The timing-ish tool out here goes back to that first chart in taking a look at the yen. Now, there's a brand new daily profile that formed. I covered that in this morning's newsletter, and it's a profile. The blue lines on my chart that formed below the prior profile. And however, price could easily move up to the 113.70 level. And if it does that, then that would be your signal, could be your signal, because then gold or the mining equities should pull back if, in fact, that occurs, right? Want to make sure we take a look at both sides of this trade out here. That would then be your signal as to when to try to come back in on the mining trades. That would be one of your signals. The problem is that can occur in overnight trading. It can occur at any time when you're actually not able to really go ahead, or I'm not looking at the screens and firing out a newsletter at 3 in the morning to say, okay, now is the time to go and try to buy back your positions inside the mining sector out here. So no question, price there, the yen itself is up against a good level of support. We also know with regard to the yen out here, or what I know, again, longer term, out here. This is also the bottom chart here is exactly what commercial traders are doing with regard to the yen. And in this case here, the way that I have this line drawn, they are up towards high net long positions. Now, on this weekly chart here for the yen, we can see the prices up above Stevie's red line. That tells us on a weekly basis that the price oscillator has turned up. That is therefore bullish. Now, we're not above the zero line. I don't think we are. Let me go. I can just easily just simply add one click out here. And no, we are not above the zero line. But nonetheless, we have a rising price oscillator. And that is a bullish, has bullish potential to it out here. So the combination of the U.S. dollar index with that seventh wave in all these things are factors, and I think they're positive factors. Then what you and I can actually take a look at is what is gold doing? What is gold doing right now at 450, up 450? What is it doing in relation to its TAS market profiles? As long as price stays above the current weekly profile high. 1235.60 is the exact number, only $4 higher than where it's at right now. Then what we're looking at is the potential for gold to move up into the 1278 to 1304 area. Those are the 1-to-1, 1-to-1.272 A to B equals CD levels, and they also get us back into that November 9th swing point out here. I suspect that is where that's where everything is lined up. As long as gold is going to go ahead and do that, if in fact it does that, then you're not going to be able to get back into the mining sector. In other words, they shouldn't pull back. If, on the other hand, the yen finds support at the levels we looked at, gold falls back below this 1235.60 level, then gold could actually pull back into the 1212 range, the top of its daily profile, and that would be another trigger point for you to take a look at coming back into the mining sector. So that's what I see. There's another tool that we covered in the newsletter that says that gold has more to run to the upside. If we just take a look at just the GDX as an example out here, and we take a look at what it has done, the question would become, where is its A to B equals CD? Because there's really been no retracement whatsoever. If we use the trading day of January 5th, which has 135 million shares, we've never gotten past that swing point. I mean, we're trading above that swing point, but we've never done it with that kind of volume. The closest was on January 31st with 92 million shares. If we do go ahead and use as the swing point January 24th, that had 78 million shares, then the answer is, well, we got above it. No, we didn't. We didn't get above it. We're still not above the level with volume. And since David is such a volume aficionado out there, that could be where he's coming from. My take with regard to volume is that it's only one portion, maybe 25%, maybe it's 35% of what it is that we should be looking at out here. And therefore, the influencing factor with regard to what gold and or the miners are doing is really going to be that currency pair, the Japanese yen, U.S. dollar out here. So those are the things that I'm taking a look at. Congrats on the trade. Congrats on taking money off the table. And wait for a retracement. Whether or not we're going to get one at this stage here at 1:23 in the afternoon, I'm saying there's no indication that we will, but we do know these resistance areas where price is trading into, and I say you've taken that trade off the table. I gave you another new trade earlier today, and I would go with that trade now. Okay, so that's for Greg in Minnesota. With regard to the markets, there was a question inside the Tiger's Den. There was a chart that I was showing here. It's a 30-minute chart here for the ES Mini. And if we take a look at the ES Mini on this 30-minute chart right here, we're going to see a couple things. First, you might ask yourself, what stopped the price this morning, or what pattern was forming inside the ES Mini? That sounds like a much better question to ask out here. Well, let me show you that. I guess what I have to first do is turn it on, meaning the A to B equals CD tool. So if we take a look at what actually formed out here, and this was confirmed at this is a 30-minute chart between 10 and 10:30. There was an A to B equals CD to the downside in the ES Mini, with the A point being out here from 9:30, around 9:30 to 10 yesterday. That was at the 22.95 level. Your B point on that move lower came in at about 6 p.m. 6 p.m. 1800 hours. Is that right? 12 plus 6 p.m. This was yesterday when price got down to 22.84 and a quarter. Makes a nice retracement up into the 22.91 level. So your one-to-one objective of this pattern, 22.80 and 2 ticks 50 cents. It actually got down to 22.81. That works. No, wait. Yeah, 22.81. That works for me out here being 2 ticks away. And you had the bulls rush in. Now, the question is, has the ES Mini formed a top? And the answer will be, as long as price does not break back above 22.91 and a quarter, as long as we see a series of lower highs and lower lows, and the answer might be yes. Now, it's a little risky here because what formed is a 0.382 Gartley buy pattern. So this could be a very strong buy pattern actually for him. You may say, what are you talking about, Willis? Well, if we take a look at the retracement levels, let's go ahead and get rid of that A to B equals CD pattern out here. Coming off of the low swing point that I'm using around 1 o'clock in the morning back on February 2nd, all the way to the high of yesterday, what you will see is price only made a 0.382 retracement. It doesn't get much stronger than from a Gartley buy standpoint for the A to B equals CD to complete at the 0.382 retracement. So this could be one, can I say it? I think it's a candy bar, a hell of a. This could be one hell of a to B equals CD to the upside if, in fact, we see price take out the 22.95 level. That's what would need to be done in order for that to occur. It is an absolute possibility out here. It is. What I know, though, and what you know, is the market, the Dow, is supposed to form a top tomorrow, Thursday, or Friday. Steve Rhodes with TFNN. Maybe the memo came early. I don't know.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So Dow's off 40, flat market otherwise. If I take a look at what's going on underneath the covers just a little bit here, if we take a look at our advanced decline oscillator readings, those are at the very bottom panel of the New York Stock Exchange. That's the very left-hand side. The next panel to it is the composite. To the right of that is the Dow. What we can see is all three of those are below zero. For a second day in a row in the case of the New York Stock Exchange, the Dow has been below it for a while. What this tells us is that sellers are in control of these markets at the moment. May not feel like it, and it really doesn't. May not look like it, but it really does. Sellers are the ones that are in control of this game as we speak right now. Now, inside the S&P 500, the other tool that we take a look at is the volatility index. And if we look at it, its message is still gobs of liquidity. And of course, we make that determination because price is not even able to get up to its 50-day exponential moving average. Yesterday was 1220. Today it's 1216. Tomorrow, who knows what that number will be, but it's going to be in the 12s area. And not until we see the VIX close above that 50-day will we have confirmation that a retracement, a pullback is in the air out here. As long as it stays down at these levels, it just communicates to us gobs of liquidity. And that is what we have right now. So we have conflicting information. So that begs us to say, well, if we have conflicting information, what is it that the indices are communicating to you and I? Can we go take a look at each of the indices? Because I don't see any emails out here. No cards and letters. My feelings are getting hurt out here, but really not that badly. So with no cards and letters, let's take a look at those indices. Let's just do it one by one, get a feel for where we're at. Now, if we take a look at the NASDAQ composite, remember it is sellers that are actually in control of this marketplace. And Peter, we will get to the Russell for you for sure. If we take a look at the patterns out here, we can also see that price is starting to find resistance at Stevie's red line, the oscillator unchanged line. What that means, as long as price is below it, is that the price oscillator has begun to turn down. Now, is this a bearish pattern here? No. Not at the moment, it's not. Nice little doji candle that took place yesterday. Price moving higher, doing less relative energy out here. But at this stage, the message is kind of neutral, but yet it does have a topping pattern. So the NASDAQ composite, which is in the hands of the sellers, does have a valid topping or potential topping pattern, unconfirmed. Right? It is unconfirmed out there as we speak. How does it get confirmed? Pretty simple. You have a vote of the Senate, and you have some squabbling that goes on. But as soon as we see that bearish reversal signal, the squabbling would be over. Now, I had a request to take a look at the Russell 2000 futures contract. Peter, is it okay if we just look at the Russell 2000? I'm going to assume the answer is yes, but he might write back in here no, in which case then I'll just simply go with game plan B. But if we take a look at game plan A, oh, it's not okay. You're too funny. And if we take a look at the Russell 2000, this formed a topping pattern quite a while ago. Now, it has actually formed two that we like to pay attention to, one being price moving higher, doing less relative energy. Only gets to wave number 3. Remember, these technical tools that we look at, whether it's wave 7 or 4, it doesn't really matter, or whether it's price moving higher, doing less relative energy, or lower, in this case here, moving higher, they're all valid patterns. You don't need them all to confirm it. Sometimes they do, but you just need one of them to confirm to help you identify a bottom or a top. In this case here, it was back on, looks like December the 12th, or the next trading session when that bearish reversal signal formed where we got the topping signal. Now, about a week or so later, it looks like on the trading day of December 27th or so, we had a nice Tom DeMark TD sequential 13 count with price already being below Stevie's oscillator and change line. For me, I don't have to worry about what happened 4 bars ago. That would be one of Tom's tools that he's not religious with regard to utilizing that as the signal out there, but it is one of the primary tools. So, yeah, the Russell 2000, without a doubt, Peter, in a Park City, has, in fact, topped out, and it is weak. But really, when we look at this chart, both you and I have to admit, the weakness is somewhat of an overstatement. Weak in comparison, perhaps, to some of the other indices, because really it's just kind of moving sideways. Now, the interesting thing here with regard to the Russell 2000 is that, it's in wave number 5 to the downside. 5 to the downside. I don't know. Maybe the third or the first wave to the upside out here. But hey, bottom line is it is weak out there. So let's take a look at some other indices. Although I see a question here in the den says says Steve, not Steve-O. Can you please address IWM pattern? I see it as a classic megaphone pattern. Oh, man, now you guys are just trying to throw me out there. I don't know the megaphone pattern, but I would like to learn. So, AG, could you send me or post a chart in the den? I'll put it up here on the screen. Everybody will take a look at it. But of course, I would need you to run through the megaphone pattern. But maybe you're talking about an expanding cone. I don't know. But let me look at a couple of the other indices out here. Let's take a look at the semiconductors, right? The markets are really going to move lower. Semis need to do the same. And what the semis are in, as you and I speak right now, is either wave number 7, G, or 6, F, depending on which set of swing points we want to go ahead and pull from out here. However, this continues to trade above Stevie's red line, and as long as it does that, the price oscillator is rising. So and there was a TD sequential count 2 trading sessions ago, but in order for that to confirm, any one of really, we'll call it 2 things: either a close below Stevie's red line, 969.20 as we speak right now, or the low of the session from 4 bars earlier out here. We're nowhere near that. So this only shows signs of topping and signs that seventh wave is something that you and I want to pay attention to. If we look at the transports out here, inside the Dow transports, they went ahead and formed 2 topping patterns about 2, 4, 6, 7, 8, 9 days ago. When price moved higher, did with less relative energy, and then we had a gap to the downside. And while it was doing that, it was also singing in the key of G, that 7th wave out there. So the transports have given us a signal that they have topped out for the time being. So you kind of get the picture out here with regard to the markets. They're just suggesting that what they want to do, and the problem is they haven't given us the start date. It could be tomorrow. It could be Friday. It could be when David White comes on, for all I know. And that is something that is going to be brief. But I don't mean brief like a couple of days. I don't mean brief like what a horrible brief. Was it a brief that did you listen to those guys last night in front of the Court of Appeals out there? Really? No, actually, the guy from the state of Washington seemed to have his stuff together. The guy representing the government. You and I were paying for that guy? That's his performance on stage? Really? Good Lord. This does not have anything to do with side you're on. Just the guy's performance was basically disgusting. Steve Rhodes, what do I know? Steve Rhodes with TFNN.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. And you know what I love about each of you out there is your sense of humor. It is great. Listen to this. This is an email here from Steve. In fact, he signs off as Dunkin' Donuts Steve. You got to love it. He says, "Hi, Steve. Similar to the megaphone pattern, can you check the xylophone pattern for GE?" You got to love it. And, of course, he said, just kidding, of course. But can I give a quick view of GE? So let's go do that. And, AG, I'm sorry. I couldn't see the megaphone pattern that you're looking at. But if you post a chart out there, maybe you did, and I'll go take a look at it. I see now a chart I see a upload near you. I'll do that during the next breakout here and take a look at it. But with regard to GE, that's the bottom part of my screen. We'll go take a look at the candlesticks and everything else that GE is doing. But just as another indication as to what I believe is coming out here with regard to some type of retracement / correction out here, GE always has, for the most part, when I say always, not always, but a significant portion of the time has given us a clue ahead of time. And we have another one, that's formed out here for a while. Has it meant anything? No, not yet. And here's where we can see GE made a top, looks like a closing high back on December 20th, and since then has been trading lower out here. Today trading out at 29.40, whereas the Dow, as we know, has gone on to make higher highs. When divergences occur between GE, which is like number 27 or 28, with regard to the weighting inside the Dow, so it's not going to influence the Dow much, but it has been an influencer of what the Dow is eventually going to do. But we have to use some of these other tools to help us identify where those tops might come in. That's why we're taking a look at those different patterns of some of the indices. Now, specifically to GE itself, let's take a look at it. Let me also switch over to a different set of worksheets. So let's first take a look at GE, and let's go see what we can find out with regard to some volume scenarios or breakout or breakdowns or profiles. So all of the above. Let's get rid of retracement areas out here. Let's get rid of lines that were previously drawn because those are lines in the sand, and we don't want those lines in the sand. So here's what we know about General Electric. Number one, yesterday, both days closed below a market profile, a daily box that formed not that long ago. Looks like formed maybe on February 2nd or 3rd, so last week on Wednesday or Thursday or Friday out here. Let me just turn price off for a moment. Sometimes it's easier to read these profiles, believe it or not, with price on or off. In this case here, well, that's interesting. That's why I wanted to turn it off, although it was really right in front of me. But I wanted you to visually see it as well. Notice how in my little data box where it says BOTD, bottom daily, CTR, which would be center D daily, top D, which would be the top daily. See how the bottom's at 29.60 for both the center and the bottom of the box? Now when we put price back on, price is now below that. That should have been a very strong level of support. And it's proven to not be the case. Now, with regard to swing points that have been taken out, it is the trading session from January 23rd that has 59 million shares of downside. Price is trading below that with light volume. So it does say watch that price level of 29.60. If price gets above it, price should then at least move up to the 29.99 level. Sounds like a Kmart blue light special, but that's where price should head to, maybe even $30.25. Otherwise, what you should anticipate, and this is more likely the scenario, is we ought to anticipate that price is going to come back into the swing point here from November 3rd at a minimum. And that's going to give you the range of about 28 and change, 28.19, it looks like 28.60, somewhere right around there. If it breaks below that with volume, and that's a doable deal, only 23 million shares down at that swing point, then what that could do is set up a huge A to B equals CD to the downside. Not saying it's going to happen. I'm just saying it's a potential, and you want to watch, Steve, what happens if, in fact, GE gets down to that level. Because not only will it head to 27.57, it probably heads to about 26.26. Now, that makes a lot of sense with regard to heading into that 26 area, because here we have a nice little wide-ranging bar taking you back into 2015, October of 2015 with good volume. So at this stage of the game, what you first need to be watching is make sure that it doesn't get back above 29.60. If it does, 29.99, 30 and a quarter. And as long as it doesn't do that, price should head down to the swing point here from November 3rd. So that is on the GE General Electric, the General out here. So thanks for sending an email. Much appreciated. And especially your xylophone sense of humor. Our guy AG in the den, he loved that one. So that is a beautiful thing. You got to have a sense of humor, do you not? I mean, if you're not laughing every day out here, you're missing out on. I laugh at myself all the time. So you can laugh at me too. How about that? And some of you do. I know that. Okay, so let's go take a look at, I didn't see anything in the den out here. Didn't see anything in the den out here. So let's go take a look at some individual stocks. What is this going on with Coherent Inc.? Isn't it Coherent Software? They certainly beat numbers. Earnings per share, $1.23 versus 84 from a year ago. This thing is a rocket ship with big volume for it. 1 million shares thus far today, 1.1 million shares. Probably everybody in this equity is at the party, so they're popping the champagne cork because they are way above any kind of resistance out here. So now the question becomes, hey, where's this thing headed to? Not a clue. I don't know. I mean, I'll make up some figures for you if you'd like out here. Actually, I don't even know if I can do that. Where is it headed to? Yeah, I can't even do that. It's above, it's above anything that I would try to come up with and create. One thing is for sure, you've got a huge volume, huge wide-ranging bar day out here. And just because it's a gap, don't be frightened about that. This actually, well, I'll take that back. I'll let David White go ahead and talk about this one. Polar, are you listening? Because Polar is actually he is the expert when it comes to three gap plays out here, and this one is a beauty. It actually looks like it could be 1, 2, 3, 4, 5 gap plays out there. So Polar, if you are listening, why don't you cover Coherent Inc. And because, see, folks, the reason why this one really qualifies at a minimum as a 3-gap play out here, let's turn off those profiles, is because today's gap is, in fact, the widest in price probably even the widest in percentage, which would qualify. See, the other gaps we're looking at that are not filled out here, November the 3rd. And then you've got, looks like a slight gap maybe out here from July 28th. Our polar bear, he can find some gaps out here inside this. Here's the other gap. Okay, it is January 29th. So I appreciate that Z, his comment in the den about I can't really make up where this thing is going to go. Actually, I now pull that back. If David White covers this, if our polar bear covers the 3-gap play out here, and if this turns into it, first, folks, it has to turn into it, right? And I don't believe that we are there yet. So it has the potential out here. But if this were to turn into a 3-gap play, the folks in Coherent will not like it because price eventually gets back to the first gap. And that first gap, that's a long way down. I'm not saying that's going to happen. It's 68.50. I am not saying that's going to happen. And I want our polar bear to cover that. Steve Rhodes with TFNN.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back back, folks. Bill wants to take a look at Xilinx out here. I think XLNX is the ticker symbol. So let's go do that since we were talking about, I don't know, megaphones, xylophones, the whole bit out here today. It's just a musical show, but XLNX is the ticker symbol. That is Xilinx out here. And says, can you tell me short term where this is headed? Well, let's go see what it's trying to communicate to you and I. So this thing recently, meaning several weeks ago recently, back on the trading day of December 15th, broke out to the upside with volume of 7.7 million shares and then decided to have a little breakdown on January 26th with 7 million shares, right? Now, it wasn't a gap to the downside, but it certainly was a push to the downside into that level of support. So this gap here, remember, gaps are our friends. They really provide us with information, a ton of information. And that is that at the 57.19 level, that the gap to the upside on December 15th is a strong level of support. So watch 57.19. It's been tested 3 times thus far, and it's been tested, with similar volume to the breakout. The most recent test was just last week with 2.4 million shares. So it's really saying to us, Bill, that it's either building cause, right, as Tom would like to say, maybe to try to bust it to the downside, and we'll go take a look at it, or this is really trading inside of a range. The problem is that the range is really not a consolidating range out here, right? It is a range where we have what looks like, a declining top. So price you would anticipate will trade with inside this little snow cone out here, otherwise known as a wedgie pattern. That's what it's communicating to us. If we go take a look at, and there's nothing like a wedgie to get your attention. If we take a look at the market profiles, they show an even smaller zone of where this is trading, which is inside the daily profile between 57.67 and 58.74 out here. So I don't see a whole lot in this. Bill, are you trying to buy this to go along? And then if you are, 57.19 becomes your number, but be careful because you're going to need to see really price break out of that descending trend line out here. Let me go to my other chart, see if there's anything for Xilinx What is it? XLNX is the ticker symbol. If there's anything else that shows up here, what shows up is as it was making the highs back here on the trading day of December 28th, that 1, 2, 3 days before that. Well, here, I'll show you. Why am I not showing you? That's a good question out here. So we can see both as it made its highs, it was forming a Tom DeMark combo. That's the red 13, and a Tom DeMark sequential count, which is can suggest significant type highs. Let's do the wave count out here. I'm just trying to explore to find where the bottom is so I can do it to the upside. No, we don't really have that type of wave count to worry about at this stage of the game. So Xilinx, I think just go ahead and put that pattern on your screen, and that is, in essence, is where it's headed. So, folks, where are we at in the markets? Quiet markets out here. We don't have. Let's go back to that 30-minute chart. Let's go take a look at it. Price trying to this 30 minutes ends in about 3 minutes out here. So unless the ES mini starts moving to the downside, so much for that descending price channel out here. And this would say that if, in fact, price moves back above 22.91, price should head up to that 22.95 level. It's at 22.95 that the sphincter muscles need to be watched, because if you get above that, could be a huge A to B equals CD to the upside. Don't know if that's going to happen, but that would be the outcome if, in fact, those highs get taken out. So, folks, stay tuned. Our favorite polar bear, David White, he's going to be up next. And after that, because it's Wonderful Wednesday, we've got the Tom O'Brien Show from 3 to 5. Have a wonderful Wednesday. We'll see you on Terrific Thursday.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate effective trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.